Hey everyone, it's Ryder from Skip. I hope you're doing well. It's Wednesday, May 4th. Breaking news today on the Fed raising interest rates. This is huge news that will impact everyone in the US, both individuals and small businesses. And we're already seeing some effects on the economy after today's news. It's better than we expected. I'm going to talk about what these rising interest rates means for you, for borrowing, if you're looking for funding or looking to borrow, some important things for you to consider. Today's hike by half a point is the biggest hike since 2000, 22 years ago. However, Jerome Powell quashes the talk of 3/4 of a point rate raise. That's fueled a surge in stocks. Would love to hear what you think about this. So I'll keep today's video short and get you the main takeaways. Thanks as always for tuning in, liking this video so others see it. I did a YouTube live earlier today, so if you're a subscriber, you probably got an alert about it. We'll be doing another one next week and the week after, talking about new alternatives to EIDL funding. Today we talked about microloans, and it was incredible. Had nearly 400 of you tuning in, watching our YouTube live today. We had David and Kayla, two of our funding experts, chiming in on microloans. Those are loans up to $50,000 to help you grow your side hustle or your business. And there's a few other great options as well. And these programs tie back to today's news on increasing interest rates. It's all related. Your ability to borrow, whether it's for a car, for a mortgage, for a business or a startup or something else. And by the way, big news, many of you have been following our channel for 2 years. Tomorrow I'm moving to my new place in New York. I'm hauling a few items to New York. So if you want to wish me luck, leave a comment below or give this video a like. I'll say more about that soon, but here we go. The Federal Reserve approved a rare half percentage point interest rate increase today and announced plans to shrink its $9 trillion asset portfolio starting next month in a double-barreled effort to reduce inflation. Inflation is at a 4-decade high. We've been reporting on this for months now. We saw the writing on the wall late last year. Today's moves were announced after a 2-day policy meeting that will raise the central bank's benchmark federal funds rate to a target range between 0.75% and 1%. There was an announcement a couple months ago about a rate increase as well. Because of this, major stock indexes rose after Fed Chairman Jerome Powell said the central bank is not actively considering raising interest rates even further, up to 3/4 percentage points. You know, so much of this is giving investors certainty, knowing what to expect so you can plan. So here's what some of this means for you, especially if you're looking at borrowing. And then I'm going to share a few borrowing programs that you may want to keep in mind. So for mortgages, this is expected to increase mortgage rates on a 30-year fixed rate mortgage. Last week was 5.1%. A year ago, the same rate, 2.98%. It's already risen quite a bit. For savings accounts and certificates of deposits, probably banks will not increase much there. You know, historically, these are very, very low. A certificate of deposit in February, on average, was 0.14%. Comparing that to other investment mechanisms, albeit riskier investments in the stock market, in crypto, and a lot of other things, the CDs and savings rates will likely stay low. However, during the pandemic, Americans have hit the highest personal savings rate in generations. Many of you have stockpiled. I've talked about that a bunch of times, not only for yourself personally, but for your business. If capital is out there, especially some of these SBA programs, not a bad idea to look into it, try to bring on cash, knowing that there's a couple things at play. Interest rates will go up. We're seeing that today, and the effect of inflation. Things are costing more. So that's why I know a lot of you have been saving. In terms of credit cards, higher interest rates means credit cards will get a higher annual percentage rate or APR. So that's not good. Of course, many of you probably don't want to be carrying high credit card balances, but now even more so, if APRs go up, you'll be paying more in credit card interest rates. Auto loans, looks like those are going to go up as well. And finally, for student loans, well, these are still on pause. The deferment period is still happening. If you took out private student loans, you know, those rates could go up because of the Fed's decision today. We'll keep an eye on that, but I want to talk about a couple things here. You know, in today's webinar here, Kayla, David, and I talked about microloans, $50,000 alternatives for businesses. And why? Because, you know, we've been tracking EIDL. There's about $3 or $4 billion left in EIDL funding. Friday, May 6th, 2 days from now, is the last day the SBA has said they will accept increase requests. So we're talking hours here for EIDL funding. The good news is, and there is good news, There are other SBA programs that have low interest rates that you are likely eligible for. As always, you can book a time to talk with us. We have a few spots tomorrow and Friday, a few more next week. You can try risk-free. You can learn more on our website, helloskip.com, or a short link to get to our VIP page, sbavip.com, to book a time to talk with us about some funding programs. EIDL funding, $3.9 million have been approved for over $378 billion. That means that the average EIDL loan amount is around $80,000. However, most of the loans, there's a very long tail here of loans, $50,000 or less. That's the majority of EIDL loans. So SBA microloans are a good option. So here's some of the quick takeaways. SBA microloan up to 50K, small short-term low interest rate loans designed to assist self-employed individuals, small businesses, and underrepresented communities starting out in business. It's perfect. If you don't have revenue, you're just starting out, you've gotten denied elsewhere, consider an SBA microloan. The average microloan is between $10,000 and $14,000. Repayment terms are 6 years, which is longer than a lot of other private lenders. And here's a quick reference guide to these SBA programs. I'll put this sheet up on our blog, helloskip.com/blog. With everything else rising, mortgage rates rising, auto loans rising, credit card rates rising, these so far are going to stay low and are good options for you. 7A up to $5 million. I'm talking about that on a YouTube Live next week, and the SBA Express programs, Cap Lines programs, 504 program, and more. But at the bottom here, we see non-7A loans, microloans that you can use for working capital, supplies, machinery, equipment, and you go through an intermediary. We have a list of the intermediaries, the 504, 7A. So there's a lot of capital here in all of these programs. We are starting to guide people step by step. If you don't want to become an expert on all of this yourself, maybe you do, but if you don't, we can guide you through it, talk about these options, pros and cons of each, some considerations to make, how to apply, and go through the forms to make this painless for you. The good news is a lot of these are run through third-party lenders, SBA approved lenders, who have processes similar to how the PPP program was run. So a lot of the private lenders have good systems in place to get you approved and get you funded fairly quickly. So there's a lot to keep in mind there. The point is to have your eggs in multiple baskets for yourself as an individual or as an entrepreneur trying to grow your business, startup, side hustle, to get you capital that you can use to grow your business, reach more customers, hire more people. And just because interest rates have gone up yet again doesn't mean there aren't still good options out there for borrowing. So that's the quick news/SBA update. Thanks to everyone who tuned in on our YouTube Live earlier today. Can't wait to see you on our live next week, where we're talking about more funding programs for you or your business. Most importantly, stay well, stay healthy, and I'll see you tomorrow.